began with a signature, a quiet decision made behind closed doors, a move that would ripple through the global economy. March 4th, 2025, officially marked the first day of Trump's new trade war. No one could have predicted just how severe the fallout would be. Markets braced for turbulence, but what unfolded was a financial bloodbath. Investors hoped for mere uncertainty, not catastrophe. Yet, as the markets opened, it became clear. This wasn't just another political maneuver, it was economic warfare. The opening bell on Wall Street triggered a freefall. Trillions of dollars evaporated in an instant. Panic spread like wildfire, a sell-off not seen since the last financial crisis. America's closest allies responded swiftly and decisively, striking back against the tariffs. Day one of Trump's trade war had begun, and the regret, it may have already set in. Before the markets even had a chance to stabilize, the damage was done. Within minutes, Wall Street was in chaos. The S&P 500 plunged 2% in an instant, wiping out $3.4 trillion in market value. The same investors who once cheered Trump's post-election rally now watched in disbelief as their portfolios crumbled in real time. This wasn't a mere dip, it was a brutal collapse. The Dow Jones Industrial Average experienced one of its worst days in years, plummeting 800 points as institutional investors scrambled to offload stocks. Meanwhile, the Nasdaq Composite, a pillar of America's tech dominance, officially entered correction territory, dropping 10% from its December peak. This wasn't a fluke, it was full-blown panic. But it didn't stop at stocks. The CBOE, Volatility Index, VX, often referred to as the market's fear gauge, surged to its highest level since December 2024. Investors weren't just reacting, they were fleeing. The longest bull market in history, built on optimism, crumbled overnight. And the sell-off wasn't limited to high-risk companies. It was the giants of American industry that took the hardest hit. Nvidia, the AI golden child, faltered under the looming uncertainty of US-China relations. Alphabet, Google's parent company, struggled to maintain footing. Amazon, a global powerhouse, suddenly found itself vulnerable. Tesla, already grappling with supply chain issues, faced one of the most devastating blows of the day, its stock plummeting 45% from its late 2024 high. Investors, who had once bet on Elon Musk's bold vision, were now pulling their money out, terrified that this was just the beginning. Wall Street had gambled on the belief that Trump wouldn't touch the very economy that secured his second term. But by the closing bell, those bets were lost. For investors, businesses, and ordinary Americans, the pain was just beginning. And this wasn't a surprise. The warnings had been loud and clear for months, from economists, business leaders, and even members of Trump's own administration, yet none of it mattered. On March 4th, 2025, Trump launched one of the most aggressive tariff policies in modern history. The numbers were staggering. A 25% tariff on all Mexican imports, another 25% on all Canadian goods, and a fresh 10% levy on Canadian energy exports. Then came China. The existing 10% tariff doubled to 20%, reigniting an already tense trade war between the world's two largest economies. But the real shock wasn't in the numbers. It was the collateral damage. The businesses, consumers, and supply chains that had been intricately connected for decades. American manufacturers faced rising costs for raw materials. Small businesses reliant on affordable imports found themselves squeezed overnight, and the average American household braced for higher prices. Trump justified these tariffs as a matter of national security, claiming drugs were still pouring into the US from Mexico and Canada at unacceptable levels. But was this really about security, or was it an economic battle disguised as patriotism? America's trading partners didn't take the hit quietly. Canada retaliated almost immediately. Prime Minister Justin Trudeau, instead of calling for negotiations, announced a bold counterstrike, a 25% tariff on $100 billion worth of US goods. An immediate $30 billion in tariffs was enacted, with another $125 billion waiting in the wings. Canada targeted its tariffs strategically, starting with energy. A 25% export tax on electricity flowing to 1.5 million American homes in Minnesota, Michigan, and New York was just the beginning. Trudeau warned that if Trump escalated, Canada would go further, threatening to cut off electricity exports entirely. Then came the nickel embargo. As one of the world's top nickel producers, Canada vowed to stockpile the critical metal instead of selling it to the US, jeopardizing American military and tech industries, and Trudeau didn't hold back. Trump has hinted that Canada should become the 51st state. That will never happen, he declared. This was no longer about trade. It was about sovereignty. Mexico wasn't far behind. While their full retaliation plan remained under wraps, officials hinted at devastating blows to American agriculture, imposing crushing tariffs on corn, soybeans, and pork. Midwestern farmers braced for impact. The auto industry, already shaken by Canada's response, now faced a new nightmare. With Mexican manufacturing deeply embedded in the supply chains of Ford, GM, and Tesla, any additional tariffs or supply restrictions would send shockwaves through American automakers. And then there was China. This time, Beijing wasn't playing defense. With Trump doubling tariffs to 20%, China hinted at expanding tariffs on US semiconductors, a direct threat to companies like Intel and AMD. But the real warning was about rare earth minerals, controlling over 80% of the world's rare earth supply, essential for everything from smartphones to fighter jets. China signaled it could choke off access, throwing American tech and military industries into chaos. The message was clear. This wasn't about trade anymore. It was economic warfare, and America found itself outnumbered. The global markets had already collapsed, trade alliances fractured, and now the question loomed. How far was Trump willing to go? Markets can bounce back, tariffs can be lifted, but some wounds take years to heal. The first day of Trump's trade war had already wiped out trillions in market value, tested relationships with key allies, and placed entire industries on high alert. And this wasn't a one-day event. The ripple effects of these tariffs had only just begun. A chain reaction was underway, one that could reshape the global economy for years. American corporations weren't just watching, they were reacting. Major companies warned shareholders of lower profits, broken supply chains, and rising prices. General Motors and Ford braced for billions in losses. Home builders, reliant on Canadian lumber, prepared for soaring costs. The economic battlefield had been drawn, and the world watched. As Trump's trade war raged on,